today's episode, the top 5 things you should do when the market crashes, right? We listed out 5 things here. So, Danny, we'll start with number 1. This one's actually short. Number 1, don't panic trade with your investments, right?
Yep.
You see red, you look at your phone, and your inclination is probably to, holy crap, I need to sell. I don't like where this is going.
Oh, shoot. Sell all button.
Yeah, exactly. Sell all.
Do not do that.
You know what? I would even say that's the worst, the worst of the 2 options. Another thing some people may be inclined to do, and I was one of them, was to hurry up and buy more, right? Like, oh my gosh, discount, let me buy more. That's certainly good thinking that you want to buy in a discount, but I'm still going to say, hold on, just before you do anything, put your phone down, close your apps, stop looking at the headlines, and let's give ourselves, a couple hours or even a couple days if you need to work through some things. That's the first thing, is don't panic trade with your investments.
I will admit, if I still had income flowing, I probably would be inclined to think just how you did, was, oh, it's dropped. Let's buy a little more, right? And I know that's a form of timing the market, but I think that you and I have both kind of alluded to the fact that we do like to time it just a tiny bit on the downside if we have spare powder, right? Dry powder on the side.
Yeah, I don't believe in market timing. I think one way we could phrase what you just said, Danny, is we like to keep additional funds on the sidelines, maybe a little bit beyond what a normal emergency fund would be. And should an opportunity arise, we are in a very safe position to happily tap into some of that dry powder, which is not putting our emergency fund at risk, to take advantage of that opportunity. Now, some people could argue, well, why don't you just invest it to begin with, because you're inefficient with extra cash sitting on the sidelines? That is a valid argument. I think this just gets down to, and I acknowledge it, right? But my personal preference and philosophy is that I like to have an emergency fund plus a little bit extra. It just makes me more comfortable. And I like to take advantage of opportunities like this when they come around. But for the sake of today's conversation, we are still saying, number 1, don't panic trade with your investments. And that means buying or selling, right? It's particularly selling, I think, for most people. Once you do that, we go to number 2. What's the second thing you could do when the market crashes? I would say just review the security of your income in your job, right? Like, I mean, Danny, you and I have talked about on previous episodes, like what to do when you get laid off, thinking about your, how stable is your job, things like that. I mean, I think at the end of the day, people should sit down and ask themselves these questions and answer them honestly, which is, are you reasonably secure with your job, right? Are your income sources reasonably secure? What is the actual risk you could lose your job or your income in the coming months? If the answer to those is reasonably no, like you're not going to lose your job and that your income is secure within reason, then what are you worried about, right? Like you're
in response to losing your job, I'm going to cut in here.
Sure.
I do want to call out that you can, as an employee, you can be very confident in your position and be wrong about whether or not you're going to be laid off. I certainly didn't think I was going to be laid off a week before I hit 10 years with the company, but they let 600 people go, right? So it happens when you might not be expecting it.
Did it truly blindside you though, or was there some writing on the wall? Like, did you have any concerns, even if mild, that maybe something's going on?
Maybe 1,000 to 1,200 people had been let go earlier in the year.
Okay.
But because of that, we thought that we were at that equilibrium state.
Gotcha.
Where the rest of us were just going to be pushing forward, to make things happen.
Yeah, I think you're raising good points here, that it's not always cut and dry that you're going to know exactly whether your income is secure or not. I think it's going to depend on the job you're in and like how intimately involved you are with the business minutia, if you will. Like if you are one employee of hundreds or even thousands of a big corporation and you have very little to no insider information about what decisions are happening at the high level of business, maybe there's a lot of ambiguity between you and the higher ups that you really don't have any certainty whatsoever. But maybe you are higher up, or maybe you work for a smaller company, right? And you have a relationship with your employer that you could have conversations about this and candidly approach them and just say, hey, candidly, like, how are we? Are we okay? Do I need to be worried?
Yeah.
That type of thing. I think the point of this number 2, review the security of your income and job, is you as a listener, what can you do within the best of your ability, within reason, to reasonably assess whether your income or your job is at risk, right? And I think, be prudent and do a little uncovering and, talk to the people you need to, or review what you need to review, but come to some kind of answer with this one. Jot it down, write it on a piece of paper. Very secure, moderately secure, slightly secure, not secure at all. Kind of give it a grade, if you will, right? And then we'll move on, right? I think that's because you're going to see as we get through the next steps of these things you should do. We're trying to paint a picture here to help people realize they're probably going to be just fine. But that's what I would say. Number 2 is review the security of your income and job. So number 3, Danny, you and I have hit this one so many times, and review your emergency fund. Answer these questions honestly. Is your emergency fund reasonably funded? If you tap into your emergency fund, can you replenish it with your existing cash flow, right? If your answer to these is yes, then you're starting to paint a picture that you're in a pretty good position. When the market, like if your job is doing well and you feel reasonably secure about your income and your emergency fund is reasonably funded, ask yourself, like, has anything actually changed? Like the market, yes, the market's crashed, right? It's down right now, but my income's still here. My emergency fund's still here. Nothing about my situation has actually changed other than the fair market value of my investments is temporarily posting at a lower value on my net worth statement.
Yeah.
Right? Like,
yeah, your number of shares in those companies hasn't changed. It's just the value within the account. Right. And you don't need to worry about that as much until you are ready to actually withdraw.
Yes. Yeah. If you're not using those assets for your income sources, this becomes even less of an issue, right? I could definitely see this being a concern for somebody who's in the decumulation phase, right, in retirement. They have to pull from their investment portfolio, and they're concerned about having to sell off assets when they're down.
Which is, why we've talked about sequence of returns risk in the past, and having a suitable amount of cash or cash equivalents on the side that you can dip into when the market is not performing how you need it to, in order to ensure that safe withdrawal rate.
Yeah.
As well as having, baseline income with, fixed income options.
Yeah. Yeah. I mean, to your point, some people might do the cash bucket method where they have extra, like 1 to 2 years of expenses in cash for this very reason. Some people might have an income floor with an annuity. Some people might have holdings that pay dividends, so they don't have to sell shares to begin with, and they just use the dividends to supplement their income. Maybe they were reinvesting those dividends, or maybe they were taking them as cash. Whatever they were doing, they have the flexibility to shift when they need to. I mean, there are lots of levers people can pull depending on what the makeup of their assets are. But the point is, when you start to paint this picture, we're jumping ahead a little bit with the review of your investments, and we'll get to more of these thoughts in a minute. But the point is, you want to start just covering your bases, because you cover your bases and you start to paint the picture that, hey, I think I'm really going to be just fine, right? So, but yes, review your emergency fund. If your emergency fund is in dire straits, then a market crash could maybe be, Danny, as you like to put it, a kick in the pants to maybe have you refocus on prioritizing this emergency fund, right? It's easy for us to kind of put savings on hold, and we like to spend or live in the moment. We're all for being intentional and living in the moment, but it's moments like this where your fundamental foundation of finance really kicks in to give you the support you need. So I don't know. I think that's the silver lining too, Danny, is when these things happen, I think it kind of it forces you to put your finances to the test a little bit. And I would actually argue it's a healthy thing for people to go through some of this, right?
Yeah.
It's, from a cycle.
Our finances personally have definitely been put to the test this year. We've been succeeding so far, but Definitely been tested for sure.
Layoffs and all that stuff. Yeah. Number 4, Danny, review your immediate budget needs, over the next few months, in the coming 1 to 3
Okay.
months. If I were in this situation, right, I'm thinking about market crashes, I'm reviewing my budget. Is there anything easy expenses that I can just cut immediately that I'm not using, right? I can just revisit really quickly. I'm not saying we have to open up our budget and do a massive deep dive and spend hours and hours and hours, but what are some of the high level stuff you can kind of wrap up relatively quickly? Is there anything easy we can cut, right? Do we have any large expenses coming up? Are we moving? Do you have any large bills on the horizon? Do you have a big purchase coming up? I think those things are important to be aware of if there's a market downturn, especially if you were kind of earmarking a part of your portfolio to pay for one of those large expenses coming up. I think that introduces an interesting wrinkle into the equation.
Well, there's also, there's so many arguments for if you are actively saving for a large purchase to not keep your money in the market, right? To not have it in highly volatile equities that may or may not show a positive return within the next 5, 8, 10 years, right? Generally, if you're within the market, you want to be in it for the long term. If I were saving for a house or something, right, I'd be saving that up in CDs or a high yield savings account, something that is not going to put that initial principal at risk.
I think that's a perfect example. This reopens the conversation around money that you put into the market to invest for the long term. It really needs to be that. It needs to be for the long term. Imagine somebody was putting money in the stock market and they're throwing everything in there and they're like, I've got a down payment for a house coming up, or I need to buy a new vehicle, mine broke down, whatever it might be. Well, I'll just use some of my funds in my stock portfolio. Well, this market drop that happened yesterday is a good example of when the timing could potentially go really poorly for you, right? If it happened to line up this week or even in the coming months, because who knows how quickly the market will recover, right? Markets can recover quickly. They can recover quickly and then drop again. They can kind of stay flat for a little bit and then recover. It's really hard to know how that's going to pan out. And this just highlights the nature of volatility in the market and why that doesn't line up nicely with kind of large upcoming expenses in the short term. And by short term, I mean, Danny, I think you and I have talked about this. That could be anywhere from 1 to 5 years, right? Like, it's hard to know. But I sometimes you're rolling the dice a little bit when you're putting money in the stock market, that you're kind of mentally earmarking that you want to have access to in case something comes up in the short term. It's a little risky to do that because that, like you said, the sequence of returns can really come to haunt you. And this is prime example of that. Speaking of which, Danny, we will do an episode soon on sequence of returns. We should definitely cover that. But I think this is the big thing: is review your immediate budget and see, what things look like. What are expenses right now? Anything coming up? And I don't know if things are really worrisome and you've got to increase that cash flow. I mean, go back to listen to our house hacking episode, right? Or maybe get a part-time job. You might have to, if things are really dire, you may have to get creative with how to increase your income. So
very true.
Yeah.
So we had touched on the emergency fund just prior, and I just wanted to call out, I believe it's episode 49 that we recently dropped, is when to use your emergency fund. I think that would be a great episode to go and listen to after this.
Nice. Yeah, and I actually think there was a question in there that one of us posed to another about a market drop, and do you tap into your emergency fund? So yeah, but let's move on. Number 5. This is the 5th thing. Now that you've gone through and we've said step 1, don't panic trade with your investments. Take a breather, put your phone down. Step 2, review the security of your income and your job. Step 3, review your emergency fund. Step 4, review your immediate budget needs. Finally, step number 5, review your investments, right? That's not number 1, right? But like, that's what most people want to do. They want to panic trade. They want to jump into their investments when they see a market pullback, and they want to take decisions because they feel compelled like they need to do so. I think the best thing to do is like take a breather for a second and review your fundamentals. And when you have a clear head on what your job security and income security looks like, what your emergency fund looks like, what your upcoming bills and expenses look like. If you have a good, clear head and you have a grasp on what that's looking like over the coming months, then I would say you're in a more objective headspace to review your investments and determine whether you need to sell or buy anything, right?
Absolutely. If you initially, in deciding on those investments, right, if you had done due diligence and you understood what you were buying and why, ask yourself, have any of those fundamental reasons changed? Did anything change with that index or that company, that fund, whatever you happen to invest in? Has something changed with that in particular that makes it less attractive than it was? Or is it just a systemic issue? If nothing has changed with those fundamentals that you initially decided on, you probably don't want to take any action.
Right. I totally agree. I mean, I get this question a lot. People will say, Chris, did you see what happened in the markets today? And I know we're talking about what happened in the markets yesterday.
Yep.
And it really does go against my philosophy. And quite frankly, like, I didn't really care what was happening yesterday.
I didn't either.
Yeah. And
it's okay if people did.
Of course.
Right.
Yeah,
but
of course.
But we're not near retirement and it's not really top of mind for us at the moment.
Right. It's like your investment portfolio, it should be set up for a long-term plan.
Mm-hmm.
Why in the world would I take drastic measures to change things in my portfolio based on something that happened in one day, right? Like I'm thinking decades into the future from now, right? And unless there is something so egregious that is so life-altering that hasn't been done before, right? Why would I jump in and panic sell, right? Like that's not a prudent thing to do, right? And
yeah, I think that's an entirely different episode. If something is so egregious that you're like, I'm out of the market, what do you do then?
Yeah. I mean, I've heard people joke about this. Like, when would something be so egregious that it warrants completely getting out of the markets, right?
Mm-hmm. That's a whole different discussion.
I've heard people literally say, like, the end of the world. Literally, it's like a scenario where you're not even going to be worried about how many dollars you have in the bank anymore. Like, you're going to be
your money means nothing at that point.
You're worried about
in that
do you
case,
have food? Do you have water? like your money's not going to mean anything at that point. So we need to live in reality, right? We live in a global economy. There are global markets, and there are so many forces at play that are compelled to carry that global economy and market forward into the future. Like that's what everything is built on, right? In business, in economy, in civilization, even, right? Like modern day civilization. And there was a really cool quote I saw recently, Danny, in an article. I think it was by The Atlantic, and it said, "Breaking news about market meltdowns is a part of life. So is forgetting about the last one," right?
Absolutely.
That is so freaking true. Like, I couldn't even, if you were to put me on the spot right now, Chris, what was the last market crash? I don't know. I've forgotten about it. It's behind me. Like, and you know what? Every market crash that's come before was also painted with things of doom and gloom and horrible things happening in the world. And are there horrible things that happen in the world? Yes, but there are also incredible forces at play that are striving to grow and push us forward, right? Globally speaking. So I often hear people say this time is different, but that happens with every single market downturn. I always hear people say, yeah, but this time is different. It's like, that is the same song that's sung time and time again.
Yeah. If you truly believe that, with whatever you believe, then just take some actions that you deem appropriate to have a bit of insurance for yourself, right? Whatever that means for the situation. Mm-hmm. If you are worried about something, take some actions to mitigate it or prevent it, and then continue with life as normal.
Yes, I would agree with that statement, so long as whatever thing you are concerned about, the risk is actually a rational risk. It's not something that is born out of irrational thought, right? Because then if you take action on something that's born out of irrational thought, you are then objectively just making your situation more risky, right? That's
fair.
That's not a good situation to be in. So But yes, sticking, just closing thoughts on the step 5, reviewing your investments. Danny, I think you raised some good points too, and it made me thinking, has anything about your plan actually changed? I would throw another question in there, like, are you reasonably balanced in your portfolio, diversified, right? When I'm thinking about a market pullback right now, I'm thinking about it in the context of somebody who has a pretty logical, vanilla, diversified portfolio.
Yep.
But if somebody is in this situation where they have very incredibly speculative bets,
Mm-hmm.
I think that's a different situation. And
Yeah.
I think that's where you have to go back to what you said just a few minutes ago, Danny. Like, has anything changed about your conviction in what you're holding? Right? Like,
Yeah. If your portfolio is 90% NVIDIA, I understand if you want to make a few changes right now.
90%. Wow, that's
Hey, I just picked a number.
it's a very of one's true total portfolio. Wow, it's a big.
Yeah.
You know what?
Hopefully, I'm sure there's someone.
Yeah, ironically, Danny, the funny thing is if somebody bought Nvidia when it was like, I don't know, before it 10x'd just in the past 18 months.
Mm-hmm.
So maybe somebody ended up having it be 90% of their portfolio just
Yeah,
because
it's
of the
certainly
growth.
possible.
Um, the Nvidia example is fascinating. Not that we'll go down this is not investment advice to buy or sell Nvidia, by the way. Please use common sense. But it's an interesting case study about Nvidia. I don't know that I could have held it through a 10x, right? I would have been so tempted to sell it. Like, I think, I don't know, interesting. Like, it's behavioral finance, right? This gets into investing psychology, and not just the Nvidia example. I mean, this example we're giving, market crash, it's going to put your behavior, your investment psychology to the test, right? And what we're trying to say here is keep a level head about this. Don't make quick decisions. Take a moment to review your fundamentals, and when you are in a clearer headspace, and once you've, taken stock in your actual financial situation, I think you're going to be in a much better position to then act rationally in that moment.